This is a download from BFM 89.9, the business station.
Touching on earnings season, what are you expecting the 1Q numbers to look like, and what are you expecting for the second quarter and third quarter?
First quarter numbers will not be disappointing enough to shake the growing conviction that we are now stabilizing and beginning to grow economically. The second quarter will not be good enough to shake our conviction that we will not have a quickening of a tapering. And the third quarter will begin where the realities of the results will start to match our expectations. So there will be a trend towards slow improvement, Nadia, but not enough to shake the fact that tapering is still in the cards for a while. We expect from an earnings surprise, we expect that the numbers coming out of the first quarter will not be good enough to eliminate the volatility that we're seeing, and that earnings results are going to have to be much more convincing in order for the market to react positively. As we get towards the second quarter, then it becomes less of a necessity for the earnings to be really out of the ballpark in order to get the market to move up. But for now, the market is guilty until proven innocent. Companies are going to underperform from a market point of view unless the earnings results are really substantially above expectations.
On that theme, what sectors do you think will be worth a look? Is a sector like tech, which has taken a battering and dragged the market down with it, still hold value, or is it just simply too volatile?
Well, in the tech area, semiconductors and system software both look as if they could set up for a bounce. We're also looking at some of the oil-related sectors, integrated oil and gas equipment and services, oil and gas exploration and production, consumable fuels. Those do look positive for the next quarter, so we expect them to outperform relative to the rest of the market. But bear in mind, we expect to get another hit over the next couple of days, and this trend is once again becoming quite negative in the market. We're going to be watching for some really important levels for a bounce. So we're not really buyers of specific stocks now. We really want the markets overall to stabilize. And the market itself, Nadia, has become quite technical. In other words, it's much more of a trading, volatile market where volatility has come in and moves to the downside and the upside are now being dictated much more by technical levels. For example, the 150-day moving average is becoming quite important. That means that a stock has an average where it is traded on an average for the last 150 days, and so if it goes below that, intermediate traders, intermediate holders of investments begin to question whether they should hold on to it before or sell it before they really lose some money. There's a 200-day moving average and a 50-day moving average, and we're watching those very carefully. So for now, we expect the market to continue to have to look to the downside for the next couple of days. There should be a bounce, and we would be buyers on the further move to the downside, but not long term, more for a trading opportunity or for an opportunity over the next 3 to 6 weeks.
Mario Draghi has signaled that further stimulus is on the cards if inflation remains low and the euro strengthens. What's your view on this?
Well, I think he's said this before, but I think the market and the analysts are beginning to realize there's some real substance to his words. We're seeing that that Draghi is beginning to come up with a program that will treat specific countries separately in order to have a blend of performance for European zone as a whole. What we're seeing is, what we are hearing is that the ECB could buy different assets in different member states to take into account divergences between the lenders and the capital markets across the region. The aim of this program, we see, would be to lower the cost of borrowing by similar rates across the region, which has suffered in the past from financial fragmentation. So I think that there's more substance to what he's saying now. I think there's going to be more specificity as to what he will be doing, and I believe that will be a positive for the Eurozone as a whole.
Well, if that's the case, what are the positive signs coming out of the Eurozone that actually gives you any kind of hope?
Well, I think the most hopeful is longer term, the Eurozone is going to have to become less fragmented politically and to move forward politically as one unit. It's going to be very difficult. The United States has enough of a problem doing that with the 50 states, and we have one federation already, and it's very hard to do. So the fact that the program that we're seeing now is really specifying different countries and not treating the countries all alike in order to bring the group together, that is a positive step. We hope that this will be one of the many steps that will happen over time, because it's not going to happen overnight, that will bring the Eurozone together politically into a much more integrated unit that can react together as opposed to fragmentation. That's really the hope. And we're beginning to see signs that some of the small steps that are necessary to do that are being taken.
Looking at the Asian markets, do you think they'll continue to take the cues from the US as they took a bit of battering after tech stocks fell last week?
Yes, indeed. I think, I do think not only Asia, but I think the world markets as a whole are going to go through some consolidation. And as I was saying about our markets, I do believe that the Asian markets will become more technically oriented for the short to intermediate term. When I say technically, I'm talking about stocks behaving not based on their fundamental strengths and weaknesses, but more on the level that they're trading at in their respective markets. And so from that point of view, I do think the Asia will be following the United States, and I believe that it's not following the United States as much as all the countries now are becoming, all the markets of different countries are becoming more short-term oriented, more volatile. There is, from an economic point of view, there is a real positive outlook. But the economy, the economic performance and outlook is really not driving the market at this point.
That was Dojo Dorland, Chairman and Chief Investment Officer of London Fuse Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.